Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. It's taken some time, but things are looking up for hotels and motel real estate investment trusts like Parks Hotel and Resorts, Inc., traded on New York Stock Exchange under symbol PK. The U.S. hospitality industry was devastated by the 2020 health crisis with more than 4 million hospitality jobs lost. The broader hotel and hospitality industry wasn't expected to make full recovery until 2024. How have those predictions held up? Revenue per available room, or RevPAR, rose 4.8% year over year in 2023. Another important metric, average daily rate, or ADR, increased 4.2% on annual basis in 2023, far exceeding the projected growth of 1.4%. The growth is expected to continue in 2024, with average daily room revenue projected to climb 3% to $160.16, and revenue per available room to increase 4.1% to new nominal high of $101.82. The occupancy rate, meanwhile, is forecast to hit 63.6% in 2024, just 3.4% shy of the 2019 level. As a result, U.S. hotels are expected to report a record $758 billion in guest spending, a jump over 2023 record spending of $723.4 billion. So, John, what can you tell us about Parks Hotel and Resorts, Inc.?
Yeah, thanks, Mo. Yeah, Parks Hotel and Resorts is one of the largest publicly traded lodging REITs with a geographically diverse portfolio of 43 branded hotels and resorts with over 26,000 rooms in total, located in major U.S. markets with high barriers to entry. Now, over 85% of its portfolio is in the luxury or upscale market, with 100% located in the U.S., including locations in 13 of the top 25 markets. Now, if you're wondering what its hotels are, the portfolio includes the Hilton Waikoloa Village, the New York Hilton Midtown, the Hilton Orlando Lake Buena Vista, and the DoubleTree Hotel Sonoma Wine Country.
And it reported sector-leading RevPAR.
For the first quarter ended March 31st, 2024, Park announced total revenue of $639 million, which is down slightly from $648 million in the first quarter of 2023. Comparable RevPAR actually increased 7.8% year over year, with comparable occupancy rising to 70.9% and comparable ADR up 2.5%. Now, Park reported first quarter net income of $28 million or 13 cents per share. Again, that's down slightly from $33 million or 15 cents per share in the same prior year period. Adjusted EBITDA, meanwhile, was up 11%. At $162 million, and adjusted funds from operation advanced pretty heavy 20.7% to $111 million or 52 cents per share.
Here's something income investors are like. This company rates its second quarter dividend to 25 cents per share.
As viewers might know, that as a REIT, Park is legally obligated to return at least 90% of its taxable earnings to shareholders in the form of a dividend. This helps explain why it has such a high dividend yield. On April 19, Park declared a second quarter cash dividend of 25 cents per share, or $1 on an annual basis. This works out to a forward yield of 6.31%, I think. Payout is up from 15 cents per share in the second quarter of 2023. While it has to pay out at least 90% of its taxable income to investors, it does target a payout ratio in the range of 65 to 70% of adjusted funds from operation per share for the full year, which, based on Park's current guidance, translates into an incremental top-up dividend to be declared during the fourth quarter of 2024. Now, what does that look like? For comparison's sake, in the fourth quarter of 2023, it declared a dividend of 93 cents per share. Now, it's not all sunshine and big fourth quarter distributions. As a hotel and lodging REIT, Park failed to pay a dividend for most of 2020 and all of 2021 before reinstating it in the first quarter of 2022.
And PK shares have been outpacing the broader market. PK shares are up 34% year over year, and there's a potential for an additional 50% gain.
Yeah, Park stock took a massive hit during the 2020 health crisis and has bounced back since then, but it still needs to climb approximately 20% to get to where it was in January 2020. As of this recording, Park is currently trading up 27% year over year at about $15.15. It needs to climb an additional 63% to reach its May 2019 record high of $24.75. Now it's on its way. Of those Wall Street analysts providing a 12-month share price target, the average price is $18.31 with a high estimate of $24 per share.
Thanks, John, for your insights. Parks Hotel and Resort is a hotel REIT that has seen its fortune change drastically since 2020 health crisis. It continues to see improvement in demand from tourism, business travel, and group demand at both of its urban and resort hotels. Solid first quarter results were also juiced by a strategic investment made in Hawaii and Florida. These destinations are expected to help drive performance throughout 2024 and beyond. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.